Welcome everyone to HueFin News. Today is January the 3rd, 2019, the home of the 2-minute price prediction, as well as giving you all the news according to the chart. Now we're just going to do a follow on with our breaking news with Apple earnings, them revising their numbers downward on their Q1 guidance. We're going to go ahead and look at why so many other analysts who track Apple stock continues to have a buy rating. Okay, so that's what the thumbnail of this video is called. Apple stock crashes, but they are buying. Okay, this is an article written from Bloomberg, and we're going to go ahead and look at this article and see some of the price targets that has been reduced from the analysts who cover Apple stock, and see why they are still keeping a outperform rating, a neutral rating, or in some cases a buy rating, when in fact the market for Apple stock continues to show us that the market is weak. Okay, so especially when you look at the price chart is definitely not telling us that Apple stock is a buy. So what are these analysts trying to persuade or sway our or the media's opinion as to what is Apple going to do in the future? Okay, so if this is your first time come to our channel, do not forget to subscribe. If you like this particular type of video, make sure that you like and share it as well, because what we're going to do, we're going to dispel many of the notions that articles, analysts, those who are called experts are just simply trying to persuade you into a particular trade to make their position in the financial markets a better one. Okay, so let's go ahead and get started in that for today. And you can see here that Wall Street slashes Apple targets after the sales forecast. See, even the analysts who cover Apple stock is behind the curve. The only thing that allows you to be in front of the market is understanding the price charts and the price movement. And that's one of the things that we are experts at, is forecasting price predictions according to the price chart. Hence, we're able to give you news according to the charts. Okay, look at this subsection right here of this article. Okay, some analysts still are bullish on the stock amid the services growth. So the only thing they're hinging on is not the iPhone sales anymore. They're hinging their bullishness on the services portion of Apple. Okay, analysts on Wall Street lowered their share price targets for Apple after the technology titan cut his revenue outlook for the first time in almost 20 years. That is crazy. That is phenomenal to see this occur. This is definitely something of a magnitude that tells you that the global economic situation is getting a little bit worrisome when you have a technology giant like Apple for the first time cut his revenue outlook in almost 20 years. Okay, continue on. You guys can see that 6 firms reduced their share price forecast for the iPhone maker by more than 15%, and we're going to go ahead and talk about that as we get a little bit deeper into this article. One of the major ones is KeyBank Capital Markets was less optimistic. Okay, the reason being is that the company is facing large risk around its pricing for iPhones, meaning that it's too expensive, and the monetization of the App Store, meaning their services portion. And then you got the other side of the coin. You know, you got Royal Bank of Canada. They are bullish on the stock, noting that it's getting closer to attractive valuations, and that non-iPhone business such as the Apple Watches, the AirPods, as well as other services like Apple Music are still growing strongly. So those are the things that RBC is hinging their bullishness on. Okay, so we definitely are seeing two sides of the coin in the market for Apple stock, and the determining factor is going to be on the price charts. Okay, so now what we're going to do, we're going to go ahead and look at some of the price targets that have been reduced from some of the people or institutions that are covering this stock, and I want you to see how even these analysts continually revise their price targets, their analyst ratings. They continually do it. So do not be confused when you see these analysts, these institutions come out with articles videos stating that they are reducing or they have changed their analyst rating for any particular company. Okay, that's why we are simply here to tell you to make sure that you only pay attention to the price chart. Okay, at the current levels, Apple has dropped nearly 40% from its most recent record, which was in October, and you can see here on this particular chart that the price has been in a very severe downtrend. And the first one up, okay, we're gonna look at Goldman Sachs. Now, Goldman Sachs went ahead and cut the price target from $182 to $140. That is a 22% decrease from their original estimate. Okay, now how are you as an individual able to trade off this type of information when on the spur of the whim they could come out with articles like this and tell you, okay, we went ahead and revised it, we're decreasing our price target by 22%. The next one, Piper Jaffray, they cut their price target from $222 to $187 per share. That is a 15.8 decrease from their original price target. Okay, and they still have an overweight rating on the stock. How are you having an overweight rating on an Apple stock when you just cut their price target by 16%? Goldman Sachs has a neutral rating, so they're still straddling the fence, but overwhelmingly you can tell that the market in Apple is weak. So I don't understand why they have a neutral rating in Apple stock. So now let's go ahead and look at RBC. Okay, RBC has an outperform rating on the stock, but yet and still they lowered their price target from $220 to $185. That is a 16% decrease from $220 to $185. But you still got an outperform rating, but the market is literally telling you that it's not going to outperform the rest of the market. And then you have another analyst, okay, at BTIG. They trimmed their price target from $235 to $197. That is like another 16% decrease to the downside. Now you can see right here, they kept a buy rating on Apple stock again, but you trimmed the price target. The market continues to show you indications of market weakness, and you are still stating that it is a buy rating. There is the conflict right there. When you see analysts giving you buy ratings, but then in the same sentence, they go ahead and turn around and tell you that the price target has been lowered. Taking a look at KeyBank, okay, they don't have a price target for Apple, but they lowered their 2019 revenue estimate from $277 billion to $269 billion. That is about a 3% decrease in the revenue that they're expecting Apple to bring in. Looking at Loop Ventures, they didn't give us any price targets, so we're just going to go ahead and skip them. Taking a look at Morgan Stanley, you can see that they're cutting the price target from $236 to $211, and that is almost 10.5% decrease in price. They are maintaining an overweight rating, but the market continually is crashing. You can see right here on the right side of my screen that is down almost 10%, so that doesn't correlate either. Take a look at Bank of America Merrill Lynch. You can see that they have a price target of $195. They are maintaining a neutral rating, so they're straddling the fence too, but overwhelmingly I'm definitely expecting them to be more on the bearish side for Apple stock. Okay, taking a look at Numera, you guys can see here that they also lowered their price target by $10 from $185 to $175. That is about 5.5% decrease. They are having a neutral rating on Apple stock. They reiterated, so they really didn't change from the previous time that they gave their analysis. Okay, looking at Bernstein, they slashed their price target from 210 all the way down to 160. That's about 24% decrease in prices. So if you were following this analyst at Bernstein and you just got this information today that they went ahead and slashed their price target, you were expecting the market for Apple stock, according to their expertise, according to their research, for it to go up to $210, and they slashed it all the way back down to $160. but they keep it at a market perform rating. Okay, that doesn't make any sense. That is 24% decrease to the downside in price. This is why it's so vital and important for you all to understand what the price chart is indicating to you. Taking a look at BMO Capital Markets, they cut the price target from $213 all the way down to $153, like another 28% decrease to the downside in their original analysis. That is huge. Okay, if these analysts, if these individuals who do this on a regular basis are not even able to stay in tune with what is actually occurring in the market, with all of the money, all of the programs, all of the type of information that we are not privy to, if they're able to miss it by this much, then understand that it is going to be overwhelmingly hard for the ordinary investor or the ordinary individual to even play in this game. That's why we're here, to show you all that you can still play the game with them, but you got to understand the markets. Okay, so let's go ahead and take a look at JP Morgan. Let's see how much they lowered their price target. It went from $266 all the way back down to $228, which is about 14% decrease. They got an overweight rating on Apple stock too. So why are these individuals trying to insinuate to us that Apple is a buy? Looking at Canaccord, you guys can see that their price target was originally at $225, and now they slashed it or lowered it to $190 per share. They maintain a buy rating as well. So are they trying to insinuate that Apple is a buy right now? But was it a buy at $170 when they had their price target at $225? Well, sure it was. Taking a look at UBS. UBS lowered its price target from $210 to $180, which is 14%. They have a buy rating on this particular stock as well. So you see all of these institutions are stating that they are maintaining at best an outperform, a neutral rating, and even in some cases you can see in this article they are maintaining buy ratings. That does not make sense when you see a market in Apple from its all-time highs back in October seeing as much as 40% value loss till today's date. At the current levels, Apple has dropped nearly 40% from its most recent record in October. All the way up here, you can see here 40% of value is gone, and these analysts at these institutions continue to tell you that this is a buy. Really? Okay. I suspect there is some things that I'm not going to disclose as to why they maintain that. But overall, when you look at the price chart, Apple is not a buy. The price chart literally is telling you that this is not the opportunity to come in and buy this particular stock. $140 per share can be a support area. But given what Tim Cook has said, and given the recent non-action between China and the United States of the trade war, it definitely seems as if Apple has a lot further to move to the downside before everything is all said and done. Okay, the market can hold 140. Okay, so we got about $3.86 to get there in the market for Apple. Looking at on the monthly chart, again, you can see here that we're not seeing any indications of any strength currently. Okay, so I'm looking for price targets around 140, possibly back down to $135, give or take, back here to the tops of these monthly bars before we might see any true indications of some support and some buyers coming to the market. Until then, expect Apple to continue to move to the downside, and the severity of the financial market globally continues to worsen. Then $120 is going to be the true area of support that I would be trying to see this stock go. So do not be fooled by many of the articles and the videos that you read about what they are planning to do in their situation. Always pay attention to the price chart, because that is the true intentions of everyone that you have seen here on this article. Their response has already been listed on this price chart, and overwhelmingly you can see here that it is continual movement to the downside. So the price chart is telling us that Apple is not a buy. It is going to continue to move to the downside, even though $140 can be the first support area. And while everyone else on this left side of the screen continues to tell you it's a buy, the price chart is not. So we cannot go with some of these analyst ratings that state that Apple is a buy. So that is what we got to say for the continuation of this major news that is coming out for Apple and them lowering their revenue guidance for the first quarter 2019. We just want to continue to show you that the market for Apple stock, according to the price chart, is not a buy. It is not insinuating that fact just yet. We have not found the bottom. Okay, so if you guys appreciate this content, again, do not forget to like and share the video. Hit that bell notification once you subscribe so you do not forget whenever we upload this information to the YouTube platform. Again, we do value your opinion, so leave us a comment in the comment section of this video. Make sure you all maintain your profitability, and I will see you all later.